The Bank of Canada reduced its target rate by 25 basis points, and our next guest thinks there is room to cut if data is softer going forward. For more, we're joined by Jason Daw, head of North American Rates Strategy at RBC Capital Markets. Jason, thanks very much for joining us.
Thank you for having me.
So this pretty much, no surprise, this rate cut today.
Yeah, exactly. No surprise. It was largely priced in by the market. Consensus was expecting it. There's not been a lot of fireworks in the market. As you pointed out just before we started the segment, the equity market's been stable. Bond yields are a little bit higher, but no fireworks. So it is a bit of a relief given the emotional roller coaster that we've all had with watching the Blue Jays.
And it was a fun ride last night, but it's killing us coming in here in the morning. Tiff Macklin signal, it doesn't sound like there's going to be any more rates cuts for the next little while. We're at the lower end. Could you see that change? He said if things change, we will respond, but he didn't really say what needed to change for them to respond.
Yeah, I think the interesting thing when you look at what they said at this policy meeting versus the last one, at the last one back in September, they had an explicit easing bias. At this meeting, it is a conditional pause. There is room to cut if the data does disappoint, and I think that primarily relates to how growth evolves. And, their growth forecast is not all that high, to be honest. It's broadly in line with what we're expecting. So it's a bit of a low bar for that to be reached, but you'd really have to have the economic data being probably materially weaker than what we've seen over the past 3 to 6 months in order for them to be willing to cut again.
Any idea what that would be? What kind of weakness would trigger it?
We could have a broadening in labor market weakness. We could have the unemployment rate moving up. We could have GDP coming in closer to 0% instead of a half or 1%. The confluence of those factors may be sufficient for them to do another cut going forward. But as of now, it looks like they are on hold until proven otherwise.
And is there reason for optimism or is there reason for concern right now about what you were just mentioning?
I think it's relatively balanced. I think the fact that, tariffs and trade policy uncertainty has only had isolated effects on the economy, that's definitely positive. We have the budget next week. It is going to be stimulative. The degree of how much, that is an open question. But that is going to help the GDP growth profile in 2026 and 2027. So, yes, there is some room for optimism.
And with the tariffs, has it caught people off guard, the fact we seem to be weathering it, not ideally, obviously, but we don't seem to be taking as big of a hit as expected?
I don't think so. I think it's, when you have these types of issues where, there's broad-based tariffs, but the vast majority of the goods that we're sending to the U.S. Is crossing tariff-free through USMCA protocols. It's very isolated sectors of the economy that are being affected at this point. So I think it's not surprising that the consumer and the broader economy has been able to power through this uncertainty to some extent.
And I guess the question is, how much longer can the consumer power through this?
They've done pretty good in 2024. They've done pretty well in 2025. There is room in certain income cohorts to draw down savings more to support the growth profile. And, maybe the business investment side looks a little bit more positive, and that starts to be a positive contributor if the budget, focuses on those areas.
So going into 2026, what will be the biggest challenge, you think, for the BOC?
I think they laid it out today. They said, they're in a tricky situation. You have an environment where, tariffs and trade uncertainty is causing a reduction in our production capacity. It's causing an increase in inflation. This is very difficult for the Bank of Canada to navigate. So, how those factors play out in combination with how strong or how weak growth is going to be the thing that they're going to have to navigate next year.
And he had mentioned that, some of this was cyclical, but also structural as well. And I imagine that's something that takes longer if we're going through some kind of structural changes. How long do you see that carrying on?
Yeah, they were very explicit, especially Governor Macklem in the press conference, as far as, we're in a structural transition. He said this is not cyclical. So it is a multi-year type of horizon that they're talking about. But they were also very explicit in mentioning that monetary policy is not necessarily the proper tool to be able to manage this. because it can boost demand and cause more inflation. And given that they are very focused on keeping inflation at reasonable levels for the general population, they are in this tricky kind of predicament.
And does it feel like they're walking that line and keeping it will keep inflation in control?
On our forecasts, yeah, we have inflation around the 2% level, so we think it's relatively benign. I think the messaging that we've heard from the Bank of Canada over the past couple of months is that at least the upside risk to inflation, are a lot less than what they were previously. So that's a much more positive environment than I say we've been living in for a couple of years before that.
Now, I mean, this is a challenging economy right now with everything that's happening with the tariff wars. Could you see this economy coming out stronger because of it, because businesses have had to rethink and redirect?
That's going to be a combination of, what the government does from a fiscal spending standpoint, what areas of the economy they're supporting. But I think importantly, it would have to be accompanied by regulatory changes in order for the overall mix of fiscal policy to be really effective. But at least there is positive momentum in that direction overall from a fiscal standpoint, and it is looking better in 2026 than it was, let's say, 6 months ago.
Okay, we're almost out of time, but you mentioned about from the budget side, what would you like to see from Ottawa coming up next week?
Well, right now, consensus is generally around a deficit of maybe 80 billion this year and next fiscal year, a little bit higher than what the PBO estimated. And, there is some market chatter that it could be closer to 100 billion, for example. So the size of the stimulus does matter, but it also matters on how that's directed and how that's accompanied with any regulatory and policy changes.
Okay, Jason, thank you very much for joining us.
Thank you.
Jason Dawes, Head of North American Rate Strategy at RBC Capital Markets.